Hi everyone, my name is Edith Naledi. I am your tutor, and for today's lesson we will be tackling the measurement principle, also known as equity at acquisition. So measurement principle is in terms of IFRS 3 paragraph 18 that states that the acquirer shall measure the identifiable asset acquired and the liabilities assumed at their acquisition date fair value. So what that means is that when you bring in, meaning when you consolidate your subsidiary, you need to bring all their assets, all their liabilities at fair value. However, it happens that when you acquire the assets, some of their assets are still at cost. So what you need to do is you need to make a journal entry that brings those assets to fair value. I have a couple of examples that I want to share with you guys. So here are the examples. We have Raka, who is the parent. It's a company that is listed on the JSE, has a year end of 31st December 2015. So they acquired a subsidiary called Spring Rivet on the acquisition date of 1 January 2015. They gained control in terms of IFRS 10. They have land. So the land was purchased 18 and a half years ago at a cost of 2.1 million, and at acquisition date that land had fair value of 4.3 million. So because of the measurement principle, we need to show the land at 4.3. However, in the separate statement of the subsidiary, that land is shown at cost, so we need to bring the land to fair value. What we will do is increase the land by 2.2 million, and we will have deferred tax of 492,800, and equity at acquisition of 1,707,200. Remember that land is taxed at the CGT rate, so the deferred tax calculation of the land will be based on 22.4%. And then with the vehicle was purchased by the subsidiary on the 1st of January 2011 at a cost of 30.8 million. It has useful life of 10 years. When we acquired this vehicle, it had a carrying amount of 2,280,000, and its fair value is 3,900,000. So we need to bring the carrying amount of 2,280,000 to the fair value of 3,900,000. So that means at acquisition we will debit the vehicle by 1,620,000, and we will have deferred tax of 453,600, and equity at acquisition of 1,166,400. Now, the deferred tax on vehicle will be at the standard rate of 28%. These are the journals that you will process. I need to add, for purposes of calculating equity, for purpose of calculating goodwill or gain on bargain purchase, you will need to debit the equity at acquisition, meaning that you are adding the equity at acquisition together with the net asset value comprised of your share capital and retained earnings at acquisition. So that's basically the journals that you do. And with the vehicle, you will depreciate every year the same way as you would do in the individual statement. So depreciation, for instance, here is 270, and the accumulated depreciation is the contra account. If you want to know more about equity at acquisition, please contact me and I will give you more information. Thank you so much for watching this video.